Good morning, ladies and gentlemen and my parliamentary colleagues. What an inspirational presentation that was from Ian Harper. There are elements of my stomach churning in the early parts of the presentation, talking about Europe, and then a feeling of confidence growing as we see just what is happening with our nation's economy. And of course, the reality check at the end when you look at what exactly is happening here in Tasmania. So it is with great pleasure for me to be back here for my second opportunity to address a TCCI budget breakfast in Hobart, and I do thank the TCCI for organising this event once again. And also a big thank you to Australia Post and Frank McGregor for the long-standing support that they've provided this breakfast occasion as well. Last year was indeed a sobering experience where strong decisions were required in the face of a $1.5 billion revenue loss. Since that time, economic conditions have softened and revenues have declined further. Returning the budget to a sustainable position is not something that can be done overnight or just in one budget, but it can be done, and we are doing it. The first part of my presentation here this morning will explain how we're making progress to repair our finances, and then I'll move on to the broader economy, which I know will be of particular interest to all of you here this morning. While the instinctive attention of the media is to focus on budget cuts, this budget still invests some $4.9 billion across government activities. More than 2/3 of this goes on our frontline services in health, education and police. We have also put further emphasis this year on helping Tasmanians who are most in need. We have limited electricity price increases for all Tasmanians, improved concessions and funded cost of living measures through the sale proceeds of Tote Tasmania. The budget also invests heavily in infrastructure, with $4.4 billion committed to new economic and social infrastructure that will make us a more productive and healthy community. As most of you would now be familiar with, Tasmania's financial challenges have largely emerged due to the unprecedented and continued downturn in GST collections nationally, which are the product, as Ian said, of a cautious consumer. What you see from this chart is that GST receipts flowing to Tasmania have essentially been flat since the onset of the global financial crisis and right through to the present day. The dotted line represents our forecast for GST receipts in last year's budget. At this stage, the expectation was for consumer spending and tax collections to begin recovering to normal levels. However, the ongoing sovereign debt crisis in Europe and the high Australian dollar meant that this did not occur, and Tasmania sustained another year of negligible growth in GST revenue. What has changed, however, is that from 2013-14 we expect to see a significant recovery in GST receipts flowing to Tasmania. This is based on Tasmania's relative share of the GST increasing due to two factors. Firstly, the revenue growth nationally from the mining boom, and secondly, the wind down of federal stimulus funding and the Royal Hobart Hospital upgrade payments to Tasmania. Based on the approach used by other states, including Victoria and Western Australia, the budget projects that the net effect of these factors will be an increase in our GST payments of around 8% per annum, compared with national growth of around 5% per annum. This turnaround will help to reverse the heavy losses we have seen in GST revenue in recent years, and will help to put our books back into the black. We can expect a similar pattern of improvement in our net operating balance. In 2012-13, we expect a deficit of $283 million. But the following year, budget projections show a modest surplus of $53 million before a return to strong surpluses of over $200 million for the remainder of the forward estimates. Importantly, these surpluses will be used to rebuild our savings and build resilience into our state finances to absorb future shocks. As Federal Treasurer and Secretary Martin Parkinson said just this last week, with substantial risks remaining in the global economic environment, it is critical that we move now to recharge the fiscal batteries. By doing this, we will ensure that we retain the fiscal capacity to respond to future adverse shocks. Dr. Parkinson also re-emphasised that governments at all levels face difficult fiscal circumstances for the foreseeable future, with razor-thin surpluses at best in the absence of conscious decisions to raise additional revenue or cut outlays. It is in this context that the government did make a conscious decision to put forward additional budget savings and impose some relatively modest revenue measures. As this chart from the Commonwealth Grants Commission shows, Tasmania is the second lowest taxing jurisdiction of all states and territories. The government therefore decided to increase some taxes in 4 areas where Tasmania's rates are well below the rest of the nation. These measures, to apply from October in 2012, will raise around $40 million a year. They include changes to conveyance duty, which will rise to a new top marginal rate of 4.5%, still well below the average top marginal rate across other states of 5.5%. Insurance duty, where the rate charged on contracts of general insurance will rise from 8% to 10% of the premium paid, in line with the situation in most other states. Duty on Motor Accident Insurance Board premiums, which will increase from $6 per registration to $20 per registration, the first increase for a number of years. And motor tax. Tasmania currently has the second lowest tax severity of all states and territories for motor vehicle taxes, and it is expected to remain competitive despite a 20% rise for light vehicles. Despite these changes, our overall tax competitiveness will still remain below most other jurisdictions. And while the budget has not sought to impose additional cuts on health, education or police, we also have pursued additional savings targets on top of those set last year. This will save a further $68.2 million over the next 4 years. Despite these additional savings and revenue measures, we have been unable to avoid a period of net debt. Budget projections show that net debt will peak at $134 million in 2012-13 and importantly will be eliminated by 2014-15. Had we listened to those who'd urged us not to reduce our spending, and had we not made the strong decisions that we have, Tasmania would be heading for net debt of around $4 billion and interest in the order of $300 million per annum by 2016. It is critical that we owe as little as possible for the shortest time possible in order to avoid spending money on interest instead of key services. And to those who've suggested that this budget somehow softens the government's strong fiscal strategy, I would highlight that this budget only provides for expenditure to grow at an average annual rate of 0.7%, well below inflation. This is the biggest fiscal consolidation of any state in Australia, and in real terms represents a reduction in the overall size of government. Importantly, on the broader debt and liability measure, Tasmania is showing very strong improvement, taking us to levels as robust as those recorded just prior to the global financial crisis. This measure factors in the government's unfunded superannuation liability, which we will continue to meet on an emerging cost basis. The ratio of net financial liabilities to revenue is also important because it is one of the benchmarks used by international credit rating agencies. So while the budget situation remains difficult in the short term, there are better times in sight, and the government remains on track to meet its fiscal strategy targets. I'll now turn to Tasmania's economy. Tasmania's economy continues to be structurally affected by the immense forces of the mining boom, the record terms of trade, and indeed the high exchange rate. The structure of Tasmania's economy, with our historical reliance on forestry, manufacturing and traditional agriculture, means that we are hurting more than others while the Australian dollar is so high. I encourage you to look at a speech earlier this week where the Reserve Bank's Deputy Governor, Philip Lowe, spoke about developments in the mining and non-mining economies. He observed that the recent rate of growth of the non-mining economy is estimated to be a bit less than 1%. In Tasmania, mining represents little more than 1% of our gross state product compared to manufacturing at more than 10%. It is in this context that the budget projects estimated growth in gross state product to be around 1.25% in both 2011-12 and 2012-13. While this growth is modest compared to recent years, it means our economy is expanding, not contracting. Indeed, there is reason for optimism if consumer confidence recovers more quickly, along with an associated pickup in housing activity. With an improvement in business confidence and the possible confirmation of some new large projects, this could see the potential for economic growth to improve by a further 1% to 2.25% in 2012-13. However, it is clear that on most measures, Tasmania remains in the slow lane of the two-speed economy. Tasmania's economic performance has not matched Australia's, as Tasmania is not a major exporter of high-value minerals or metals. Therefore, there has been little supply of goods or services from Tasmanian firms to mining and related businesses in the resource-rich states. But as I noted in my recent State of the State address, that does not have to be the case, and we need to do more to capture the rewards of the mining boom. We already have companies such as GHD, which employs 140 staff statewide, providing engineering, environmental, water and transport services to miners across Australia from Tasmania. We also have Caterpillar Underground Mining in Burnie, which employs 400 people and exports sophisticated underground mining machinery across the world. It is by exploiting these kinds of opportunities and investments that we can create jobs and build a stronger and more diverse Tasmanian economy. The two-track national economy is also evident in the employment data. Tasmania's job numbers have been weakened over the past year, especially in full-time employment. Much of this can be explained by the decline in the forest industry and forest products sector, while almost all trade-exposed businesses in Tasmania are looking to implement efficiency measures to remain competitive in response to the high exchange rate. Together with recent increases in the participation rate, these factors have led to a large increase in the unemployment rate in recent months to above 7%. There is no denying that our unemployment rate is too high, and our rate of economic growth is not high enough. However, there is still good reason to be confident of a strong future for Tasmania. As I noted in my first budget, public expenditure was always going to decline as stimulus measures were wound back, and the state reined in the size of its public sector. Yet the private sector, across both households and business, has more than offset this decline. Private sector spending, rather continued government consumption, is the true measure for a self-sustaining recovery in the Tasmanian economy. Tasmania's private economy is now growing in excess of 3% and faster than any non-mining state. We have now seen household consumption grow for 6 consecutive quarters, recording an annual growth rate of some 1.7%. However, I accept that much of this is not flowing through to traditional retail due to the impact of the high dollar and the rapid growth of internet shopping. The other factor behind Tasmania's resilient private sector is investment. We have now had 7 consecutive quarters of growth in private sector investment, worth some $4.5 billion over the past year, and also growing at a faster rate than any other non-mining state. Local businesses have invested more than $1.4 billion in machinery and equipment over the past year, at a growth rate more than double the rest of the nation. There are many examples of major projects that are underway, including Hydro Tasmania's $400 million Muscle Row wind farm project, the $300 million final stage rollout of the National Broadband Network, more than $400 million that's been invested in dairy, and $30 million in aquaculture with the West Coast expansion. We're also seeing record levels of mineral exploration. While 96% of Tasmanian farmers intend to maintain or increase upon their current level of investment in their farm businesses. And just last week, Tasmania was ranked second only to China as the best wine investment location in the world. Against the odds, Tasmania's international exports also continue to grow. It is testament to the resilience and strength of our local exporters that over the past year our exports have exceeded $3.2 billion and our trade has grown by almost 12% over the last quarter. China has become our biggest market by a long way, but there is still so much more that we can do to capitalise on the rise of the Asian middle class. We are in the right part of the world at the right time. In order to maximise on this opportunity, we are commissioning a white paper on Tasmania's place in the Asian century. And I'll also be leading an Asian trade mission in September this year to open doors for Tasmanian business and showcase investment potential in our state. Tasmania cannot possibly thrive on the production of lower value goods that depend on a low exchange rate. We must diversify our economy and adapt. This is a long-term project, but it is a chance to lay the foundations for a stronger future. Do not misunderstand me. I know that for many businesses right now, times are tough and confidence is fragile. But that does not mean that we should fall into the trap of talking ourselves down, of making doom and gloom a self-fulfilling prophecy. We must strive to work even harder, to become more productive, to be more competitive. I visited many businesses and met with many people in this room here today. And I know that there remains a passion to do things in Tasmania that nobody thought possible. We have been through times like this before, and no doubt we will confront more testing times in the future. But my government is determined to keep making the strong decisions needed to position our state for the better times. But ultimately, it is only business and investors that can take us to the next step towards a better economic future. I urge you, the business community, to keep the faith in Tasmania's future, to invest in our state, and to create the jobs that will benefit future generations as well as our own. Thank you.